This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Tuesday morning. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Rima and Mangalam. Guys, hi, good morning.
Hi, good morning. It's a Tuesday morning, and we've packed in such a punch in the last couple of days with the kind of rally that we've had.
Well, 600 points worth. I was just, it's just like the market's galloping.
Astonishing,
ahead,
right?
You have the boxing bouts, etc. Yesterday was the heavyweight bout. It started with HDFC Twins, and then there was a smooth transition. Reliance from nowhere came, ended at the high point of trade, and ended up being the biggest contributor. And then it was ITC, which led the FMCG index to the high point as well. So imagine the top four performers doing extremely well, and that accounted for most of the gains yesterday.
Well, I'm just wondering whether it's the regular regulated boxing or is it WWF or something.
For today, it is likely to be street boxing because the FIs are absent, the US markets.
Absolutely. Well, let's just on that note tell you what you need to know as we begin another trading session. So, let me just start with that point, which is the fact that the Nifty has added 600 points in the last 4 sessions. Basically from last Monday. Tuesday is when the market made all-time high. We hit 19,900 and we are at 19,350 almost, right? So it's just been an absolutely very, very fast-paced market on the Nifty. And this is, by the way, in a way, happened at a time when maybe at the margin gains, the pace of gains, at least on the mid-cap side, are slowing down. Action is starting to shift to large caps. More on that a little later, but just a quick look at the US market. It was a shortened session in the US. Cash markets closed earlier. There is, of course, a holiday today. U.S. markets are not trading because of the 4th of July holiday. And the changes were not very much. The S&P was flat. It was up about 0.12. NASDAQ was up a little bit more, 0.25% or so. The dollar index is round about just under the 103 odd level. So not very much in a way to really take away. One data point, and I think this is the second data point, which has kind of come in weaker. First was core PCE, and yesterday we got the ISM manufacturing data out of the U.S., which came in its weakest level since May of 2020. But guess what? Markets ignored it. Well, because the understanding is that most of the inflation is coming from services, not from manufacturing. So now we will wait for the services ISM data, which is only going to come out on Thursday. On Friday, later this week, the end of the week, we get the jobs data, which of course is going to be the big one. The labor market in the US has been too tight by all accounts, and that basically leaves no slack across the board. So that's the data out of the US. But in terms of real takeaways from US markets and Qs, etc., not very much. Okay, so the Nifty has now continued its upward journey, 600 points, but it's also yesterday hit the upper end of the rising channel. This is the level we put out yesterday, 19,315. We've actually ended slightly above this level. So I would say, I think the opening is not, the GIFT Nifty now is not indicating a big open here or there. But so 19,315 in that sense becomes at the upper end of the rising channel becomes important. If the market gallops ahead, that becomes a bit of a support, which the Nifty should not enter into once again. And if the market runs away, we're basically looking at least 19,500 to begin with. So let's see if after a very sharp-paced move, no US markets later today, we get a bit of a consolidative kind of session. On the downside, the trailing reversal stop that you could keep is roughly just under 19,000 actually, but rounded off that to 19,000. But that is also 300 points away, 320 points away. But that's the closest that you could find based on hourly indicators, etc. That's been the pace of the move that we've had. On the Bank Nifty, we closed, the moves sort of picked up pace a little bit after we closed above the previous high. That was 44,500. 44,499 to be precise, and we saw that yesterday, right? The Bank Nifty outperformed the Nifty and what it did. Upside target could be about 46,000, and the supports, basically there's a big gap which we saw between day before yesterday and yesterday, 44,800 to 44,900, the high of day before yesterday and the low of yesterday, which is 44,900. That's basically the zone around where you should look for supports, trailing reversal stops, etc. Things are looking good. The only thing I think which is a bit of an impediment, which perhaps is a case against the market doing better, is that it has done too well in a very, very short time span. Otherwise, not really very much out there, which is perhaps a big negative or anything. But sometimes you need to pay attention, especially if you're trading. You need to be cognizant of the fact that markets don't go. They do go one way. I mean, it's been a one-way kind of a move, but after a fair bit of rally, perhaps there is a bit of a pause, a consolidation, sideways kind of market, which isn't a bad thing at all. Rima.
Just to put that scorching rally that we've seen over the last 4 days in context, I pulled up the performance, the gains over the last 4 trading sessions, and let's pull them up for you on your screen, and you would have those 600 points right there. The Nifty has marched on to 19,300 in a very short span. Asia this morning is a bit on the back foot. So Nikkei has retreated nearly 1% after hitting those 33-year highs yesterday. But some markets like Hang Seng are bucking the trend. The street is going to be awaiting the interest rate decision from the Reserve Bank of Australia. It's anticipated. The Economist poll seemed to suggest that we are likely to see a 25 basis points rate hike. Inflows continue in the market. So yesterday we had the FIs pumping in nearly 2,000 crore, while the DII sold about 337 crore. And in Qs today, the domestic demand appears to be quite strong. We will talk about the provisional updates that have come in from Bajaj Finance, from DMart. They seem to suggest that the domestic demand, the economy, the Indian economy is firing. But today it's also the Fin Nifty expiry. The last couple of Fin Nifty expiries have seen a surge in the last 1 hour in the banking pack. So watch out for that. Senco IPO, which is India's largest gold retailer in eastern India, that opens up for subscription today, and HMA Agro will be listing.
Yes, we will watch out for all those things. But, I'm just talking about the consolidation. You have so many positions added on the long side in the F&O space itself that now one believes that maybe there could be some sort of consolidation, largely because of the overweight that people are on the long side. I'm just looking at yesterday's purchase as well. The FIs bought about 3,000 long contracts, covered about 1,900 short odd contracts. And as a result of which, their long positions now are at 70%. At the start of the series, it was 66%, which again was the highest that we've seen in the last few series. So as a result of which, it's increased. Secondly, ahead of the Fin Nifty expiry, we've seen more call selling than put selling. So that's telling you on the way up, there may be some resistance for the Fin Nifty itself. The India VIX, despite the rally that we've seen so far, the India VIX has priced in some sort of complacency. It's still sub 12. Yesterday, after a lull, it saw a bit of a spike. So that's something that we need to take note of. And the put-call ratio has been above that 1.4 mark, 1.5 closer to that mark, indicating that we are overstretched. So what is the data on the option side for the Nifty suggesting? 19,300 call and 19,300 put, both are active. And those who are selling both of them are playing for a range of 19,150 to 19,450 on the Nifty itself. For the Fin Nifty, it closed at 20,253 yesterday. The highest open interest on the call side is 20,400 and the highest open interest on the put side is 20,200. So there is strong support expected. On the way up, do we find resistance or not is the big question, because it's two big constituents will be reacting today. It'll be Bajaj Fin and Bajaj FinServ. Bajaj Finance gave a great strong first quarter update. So to that extent, we'll see a bit of an up move there. And from the F&O standpoint, watch out for IDFC First Bank, because that is likely to open around, sharply lower, because the swap ratio has valued the company at a 14% discount to IDFC Limited. And then because the FIIs are absent today or likely to be absent because of no Qs coming in from the US, mid-cap and small-cap index is likely to perform better. And we'll also watch out for positions being built on names like Titan, GCPL, Dabur, Marico, Kalyan Jewelers, because before the result season, we have the pre-quarter updates coming in, and those are the stocks I'll be watching out for.
All right. Well, there's a fair bit, Mangalam. Thanks very much for that. Before we go any further, let's quickly tell you what's lined up here in the first half hour of the show. We get you updates from markets around the globe. Cameron Brand of EPFR Global will be tracking flows for us. We discuss the global setup with him. Our research team will get you CNBC TV18's list of top 10 stocks for the day. And at 8:30 this morning, we will have Mehrabun Irani talking to us about what he likes, the themes that he would like to bet on from here on.
On equities, Surendra Goyal of Citi says the recent rally has been premised on relative resilience of growth or earnings and driven by FII flows. Valuations have re-rated, but still just 0.5 standard deviation above the 10-year mean and a 70% premium relative to the MSCI emerging market. For June 2024, he sees limited upside after the 14% rally since March this year and suggests buying the dips. He also adds, going forward, the key to watch will be El Nino and state election outcomes. FI flows have been volatile and difficult to call on the portfolio front. They've removed Tata Steel from their preferred list of stocks and moved metals to an underweight from neutral. The key overweight sectors are financials, autos, and PSU utilities and defense, while the key underweight sectors are consumer discretionary, IT services, and metals.
Okay, well, that's Surendra Goyal of Citi. Let's get you some money market views as well. On the rupee, we have Abhishek Goenka of IFA Global who says that despite the one-year forward yield dropping to 1.7%, the rupee continues to remain steady. FPI flows into equities have kept the dollar INR under pressure. RBI's tolerance for rupee appreciation seems limited, so as to maintain competitiveness. Yesterday, for a brief while, the dollar INR broke 81.8 to a dollar, but the pair ran into aggressive bids around those levels. He expects the rupee to trade between 81.6 to 82.9 to a dollar range over the coming few weeks.
On the bonds, Ajay Magnolia of JM Financial says yields remain steady in a relatively light economic calendar. FOMC minutes are due for release later in the week. India's manufacturing PMI paints a robust picture, and crude prices continue to be stable and in our favor. In the absence of any major triggers, yields are expected to remain steady and likely trade in a band of 7.09 to 7.14%.
All right, and we have a lot of stock-specific action to track today as well. We'll get you all of them in just a bit in our special Top 10 segment. We're talking about Bajaj Finance, Reliance Industries, Hero MotoCorp, Biocon, Aurobindo Pharma, IDFC and IDFC First Bank. And also watch out for Avenue Supermarts, all those stocks on our radar on the back of positive news flow. We'll see Vodafone Idea and Bharti Airtel stocks which are on the back foot or likely to open in the red.
Okay, well, that's basically what's lined up here in terms of stocks, and there is lots of stuff today. It's a news-heavy day, this Tuesday.